If it seems like headlines are dominating the financial news more than usual, you're not alone. In the third quarter of 2019, financial markets weathered many headlines, including the United States and China hit each other with fresh sanctions in an escalating trade war. Prime Minister Boris Johnson creates uncertainty for Europe as he pushes to get Brexit done. Nancy Pelosi announces formal impeachment inquiry of President Trump. While headlines such as these can certainly rattle financial markets, the impact is most often short-lived as fundamentals such as earnings win out over time. The third quarter of 2019 is a good example where the fundamentals prevailed over headlines. Strong earnings, a growing U.S. economy, and solid employment stabilized financial markets in the third quarter. As a result, the S&P 500 index gained 1.7% in the quarter and is now up an impressive 20% for the year. The tech-heavy NASDAQ composite was flat for the quarter and is also up 20% for the year. International shares were down 1% for the quarter and are now up nearly 13% for the year. Perhaps the biggest news of the quarter was the big decline in interest rates. The 30-year Treasury broke below 2% for the first time in history. The lower interest rates reflect concerns over a slowing global economy and the uncertainty associated with the U.S.-China trade war. Adding to the decline in interest rates is an accommodating Federal Reserve. Federal Reserve Chairman Jerome Powell recently stated, "The Federal Reserve stands ready to do what is necessary to support U.S. economic expansion." What can investors expect going forward? The U.S. economy remains healthy, with wages rising and consumer spending strong. However, we must be mindful of the headwinds that a weak global economy can bring to our shores. Low interest rates and an accommodating Federal Reserve should be the vaccine needed to prevent outside economies from infecting the United States. While volatility is likely with every headline and economic report, we believe an accommodating Federal Reserve will help move stock prices higher by year end. From the HM Capital Management team, thank you for watching.